Hi guys, welcome to another video by Optionables. My name is Saket and in this video we are going to review the trades taken on 18th of August 2021. As you all know, we had carried some positional trades from yesterday, that is 35,800, 900 as well as 36,000 short straddles. So in the opening, market actually gapped up 300 points, which obviously means it's not favorable position because such a huge gap up is going to actually put us under loss. So that is what exactly happened. When the market opened, so we started with a loss of close to 80 to 90,000 and later we started adjusting the positions. We started shorting more of put options, which you will be seeing in the video further on, and later on the market fall actually started. So this is when we decided, as the market broke 36,000, that it is time for us to actually come out of all the positions because we just now shifted the range all the way from 35,600 all the way to 35,800 as a lower break even. So now it was no longer worth holding because the market had already broken 36,000 as well. So this is when we exited all the trades and we decided to re-enter everything around 1:30 p.m. So we re-entered a few of the trades where we did some penny trades, which I'll be showing you again, and we also took next week trades and finally did a short straddle towards the end. So we'll be seeing all of this in the upcoming video, and I also hope that you're liking the content on this channel. If so, then please do hit the like button, share as well as subscribe. Thank you so much for joining, guys. Hi guys, welcome to another video by Optionables, and in this video we are going to review the trades taken on 18th of August 2021. So if you have joined us in the previous video as well, so if you haven't watched it, then please do check that out as well. You already know that towards the end we had made a short straddle at 35,800, 35,900 as well as 36,000. So there were three short straddles which we had done. Right, so which means we had shorted both CE as well as PE, and this was the positional trade which we had carried overnight. Yesterday evening there was a news on HDFC Bank where RBI actually lifted partial ban on HDFC Bank for issuing credit cards. So that was obviously a very positive news, and HDFC Bank gapped up 3%. So as I had already shown this position on Sensibull, so if you haven't watched it, I'll just show the Sensibull chart from the yesterday's video itself. So as you can see here, so this is the part of yesterday's video where I had actually put the positions what we are holding, and you can see that our break even is coming at 35,662 as well as 36,137. So which means the opening itself was way above our break even. Right, so as soon as the market opened, we had gone to a loss. So now the question was, how do we actually adjust this? So you can see that actually there was no need of any sort of adjustments if we had waited till the end, but who knew the market would actually end up crashing almost 800 points from the high, right? So the thing is, as soon as the market opened, we immediately started making some adjustments. So now I'm going to tell you what are these adjustments and what exactly did we do, right? So again I'll come back to the chart, and you can see we have already opened way above our break even because our break even is somewhere over here. So now what I started doing was I started shorting additional put options. So this is the exact reason why it is important not to use all your capital in a single trade, because later in case if something goes wrong, you will need some money to adjust. And it is also important to make a note that having right position size is also important. So if you size your position wrong, then a big gap up or a gap down is actually going to cause you a lot of trouble, right? So with that being said, what we started doing was we started shorting additional put options, starting with 36,000 puts right after it opened. So then as it fell, I further started shorting 36,100 puts. So by doing this, so I shorted 1200 quantity of both, because in this range I already had the short straddles, right? that too of 1200 quantity itself. So that's the reason I started shorting 1200 quantity of put option only. So I didn't short call option here. So what I am basically trying to do is collect additional credits on the put side. So that is very important because now it has gone past my break even. My idea now is to see that how I can actually increase my break even, right? So when I started shorting the put option, 36,000 put option, I got it somewhere around 90 rupees. Then 36,100, I got around 130 rupees. So by doing this, I had collected almost 200 rupees worth extra credits. So extra credits from the put side, which means that even though the market actually went up, now I had some sufficient buffer to hold on to. So by doing the same, I will tell you what exactly happened to our break even. We had shifted our break even from 35,662 on the lower side to 35,850 to the lower side. And on the higher side, instead of 36,137, it was now shifted to 36,290. So which means we had basically shifted our break even another 150 points higher. And if the move had actually continued, we anyways had our hedge leg and we wouldn't have actually lost much, right? So this was our new break even, and Bank Nifty was trading around 36,000 in the morning. So later on, what exactly happened was, you can see that market actually started to come down. So at this point when it actually opened, we were at a loss of close to 90k, right? And because obviously it was way above our break even and we had a huge loss. And as the market came down and consolidated here for a while, we actually went from negative 90k all the way to positive 1 lakh. So it was a very good recovery of almost 2 lakh rupees just in matter of 1 hour, because the market just consolidated and most of the option lost its time premium. Once that started to happen and the market actually came down below 36,000, right, we decided we will come out of all the positions. Why? Because we had just done all the adjustments to shift the break even higher, and once it actually broke 36,000 and started to come towards 35,900, it was coming again closer to the break even. And there is absolutely no point in again trying to adjust this position to push the break even on the lower side, because you have already realized from negative 90k you have come to 1 lakh, which means you have already recovered 2 lakh and you are net positive of 1 lakh. So what is the point of trying to adjust this and actually reduce the break even? It is not at all required. So as a reason, we just came out of this at 1 lakh profit. Next, what happened is, till 1:30, 2 o'clock, we never actually took any trade. So once the market actually started to fall towards 35,700 right over here, so we saw something very strange. Not something very strange, but we felt that the premiums were little high for the amount of far out of money it was, right? So the thing is, when market was actually trading at 35,700, believe it or not, 37,000 call option, 37k call option, that is somewhere I can't even show on the charts, it is so much higher, was trading at 5 rupees. 38,000 call option was trading at 3 rupees, and 40,000 call option, so I am not even kidding, 40,000 call option was trading at 2.5 rupees. So this 2.5 rupees was more like a freebie, because you obviously won't expect in the next 1.5 hours or 2.5 hours market to go to 40,000. So this 2.5 rupees was more like a freebie. So but we actually didn't end up doing this, rather we ended up doing 37,000 call option. Some of my friends actually also shorted this at 2.5 rupees, 40,000 call option, and they also made some easy money. I would like to say this as easy money because it was almost something which was more or less risk free. So we were actually riding on this 5 rupees for quite some time. So we had shorted around 4,000 quantity and we were riding on this naked. Obviously you can't even hedge, because if you hedge there is absolutely no benefit which you will be getting, because 37,000 was at 5 rupees, 37,100 or 37,500 was somewhere around 4 rupees 20 paisa. So which means if you actually hedge this, you would only be making 80 paisa of your net profit, right? So we actually were on this for quite some time, 37,000 call option, and as it came to 2 rupees and as the time was somewhere around 2:30 2:45, we actually took, sorry, not around 2:30 2:45, around 2:15 2:30, we took 35,700 short straddles of next week. So this was next week option short straddle which we took, and we had hedged it with 35,500 current week option, so that is going to come somewhere. So when we actually did this kind of a hedge, we had hedged closer on the put side because the market was looking more negative, and we had hedged little far away on the call side because we didn't expect a big up move coming based on the OI or also based on the technicals. So OI had already hit 50 lakh for 36,000 calls, and it was quite obvious by this time it was not going above 36,000 before the expiry. So once we did this, actually the market went down. So when the market actually came down, we ended up booking our put leg, and once it bounced back, we also ended up booking this short straddle. We hadn't gone lot of quantity, which actually all this put together gave us additional 1 lakh. So both put together we were able to book a total of 2 lakh rupees on the expiry day. So considering yesterday's trade, so where we had an M2M of around 4.5 lakh rupees, so today from options we have an M2M of 2.19 lakh rupees, which means if we add up both, that is 4.65 lakh from yesterday as well as 2.2 lakh from today. So we will have to subtract the positional trade part of next month. So we have some September end trades as well as October trades. So we will have to subtract that to actually give us the net figure from this particular positional trade. So I will apply some filters where I will try to remove the current week trades and only hold the positional trades. So I will have to remove 18th of August trades. So the thing is, you can see that overall from the trades which we are currently holding, that is the other positional trades which we are currently holding in Nifty or Bank Nifty, all put together we have a P&L of 84,000. So what I'll be doing is I'll be subtracting 84,000, or I'll subtract 90,000 itself. This will give us the total profit what we have made from positional trade this week, that is 5.95 lakh. So this actually turned out to be much better than intraday trading for us this particular week, because the market was also more or less flat, because this on an average has given us from previous expiry to this expiry, on an average it has given us 1.4 lakh every day. So I am going to also show you the video of how the trade actually went today, so you will also get a better idea of what exactly I was talking about all along. So this is the morning Bank Nifty trade which we had. So I started recording around 9:30, and you can see the M2M, it has actually now recovered quite a lot. So at 9:15 tick it was somewhere close to negative 90k, and as the market came down it had already recovered around 80,000, and I had done my adjustments as well. So you can see that I have shorted 36,100 put option right over here, 1,200 quantity, and 36,000 put option, 1,200. So these two were the trades, and as I move further ahead in the trade, so you can see that slowly our MTM now starts to recover. We have come to a positive of 46,000. It's 940 now, and as I further move ahead in the trade, so I keep checking Sensibull. So I'll show you the break even. So when I actually do the adjustment, so somewhere here I must open Sensibull to actually check my break evens. Right, so you can see right over here as I have opened Sensibull again. So you can see our adjusted break evens or break evens after adjustments have actually shifted on the higher side to what you actually saw in the previous video. So here we have shifted the upper range to 36,300, and till then we will be in profits, right? So next we again continue with the trade, so I'll just show what exactly happens. And around 11 o'clock, when the market actually starts to fall, we finally decide to book everything. So let me just go ahead there. So you can see that at 11 o'clock I have already booked all my positions at a profit of somewhere close to 1,10,000. You can see the net quantity is also 0. So this is how I actually close the morning session. So post which I would have just put it to record, and finally I start recording because I wouldn't be taking any other trade. And later again I start recording once I enter new positions, and that new positions is nothing but the penny trade which I told of 37,000, which I'll be showing you now. So this is the penny trade which we actually took. You can see that 37,000 calls has been shorted at 4.8 rupees, and believe it or not, 40,000 was available at 2.5 rupees, right? And we had also shorted 36,000 calls because so based on the OI built up, we believe that the market might actually not go above 36,000 before the end of the day. So we actually hold on to this position for quite some time, and you can see that even if I come towards 2 o'clock, I am still holding on to the same positions and I haven't changed my positions. And right over here, so let me just come little more ahead, I start to short next week options. So you can see that I have shorted next week options, and I will hedge this option one with 35,300, as well as I take further hedge with 35,500. So let me just go to that portion. So you can see right over here I have hedged it with 35,500 as well as 35,300. So as I move ahead in the trade, so what you can see here, I actually end up booking this 35,500 PE. So this is my actual buy price, and I actually end up booking this at an average sell price of 37 rupees. So this would be already booked, and I end up holding on to these positions which are next week options. So I have obviously done a shift here from 35,800 I have come to 35,600 CE, right? And I also end up booking these two pretty soon. So the thing is, here again I have sorted out only intraday trades, and I have not taken regular trades because the thing is there were lot of positions and it would be more confusing for us to look at everything at once. So what I will rather do is come to the terminal and itself show you, so it will be more clear over here. So this is all the positional trades which we have right now running. So if we leave that and only consider 18th August, which includes positional as well as intraday trades. So what we can see right over here is a total P&L of 2,50,000, that is including yesterday, and today alone we have made a profit of 1,92,000. So the thing is, towards the end we actually end up booking the next week options also at a profit of around 70k. So with that we actually end close to 1,90,000. So as you saw that we had around 1,28,000 when we actually booked our penny trades, and with this additional trade we also end up making somewhere close to 70,000. So that's how we end today's day with a profit of 2 lakh. And if you include everything, that is all the expiries and positional trade, so we get a overall profit of 2.19 lakh. So which means other positional trades have also given us some profits. So that is with the update regarding the positional trade. This week positional trade we actually managed to end with a overall profit of somewhere close to 6 lakh. So as we already checked that, and this week actually went pretty well for us. So let's see, we have also taken other positional trades and we'll see how that goes in the upcoming week. And tomorrow onwards, that is Friday onwards, we'll also continue with our normal intraday trades, and we will also see how that goes as well. So I hope that you have liked the content on this channel and you have also got something to learn from this particular trading video. If yes, then please do hit the like button, share and subscribe. Thank you so much for joining guys, and I'll see you soon in the next video.